Hello, everyone, and welcome to today's session entitled Fine-Tuning E&O and Cyber Insurance. We're very happy you could join us and trust that you'll find today's presenter knowledgeable and entertaining. We want today's session to be interactive, so please feel free to ask the speaker questions when we go to Q&A following their presentation. Now I'd like to introduce today's speaker, Sherry Pontalillo. Sherry is a recognized authority on risk management and insurance, specifically in the financial services industry, with over 30 years experience. She is the co-founder and principal of InterWeb Insurance, or interwebinsurance.com, which provides E&O insurance for life agents, P&C agents, RIAs, registered reps, all discount online. Prior to forming InterWeb Insurance, she was managing principal for Integro Insurance Brokers, as well as founder and CEO of E&O Pros, and she held various senior level positions at CalSurance and Brown & Brown over the past 2 decades. So I'm sure you're anxious to hear from Sherry on the topic of fine-tuning E&O and cyber insurance. So without further ado, I give you Sherry Pontalillo. Sherry, it's all yours.
Thank you, Ryan. Thank you, Ryan. Well, I'm very pleased that we could share some time together, everyone. Thank you very much for joining us today. We hope that you take away some nuggets, some little tidbits of information that you can use the next time you go shopping for your cyber insurance or your E&O insurance. As the name implies, we're going to fine tune it. We're going to get in the weeds just a little bit. I like to say is that the small words are kind of like sand in the shoe. The small things can hurt you, and we need to get into that detail a little bit, but we'll keep it high level as often as we can. So hang in there with me, and thank you again, and we'll just take it on from here. So first, I'd like to go through what we plan to cover today. Our primary objectives are to really focus on 3 things. So you're looking to buy protection, not just paper, for your coverage. We are going to next look at the best approach to the process, how to get the most out of your effort and applying for the cyber and E&O insurance. And the last goal is really helping you protect your bottom line. And we'd like you to truly understand all of the benefits available to you. You know, some folks look at insurance as kind of a task when it's really risk management. And it is critical for business success, and it is a needed safety net. So let's get on to understanding some of those benefits. To do this, we're going to cover these topics. We're first going to look at the basics of brokering and buying. Next, we'll cover cyber insurance today, as it really is a hot topic. We're going to go over that before we head over to E&O insurance, because everyone from regulators to business partners are starting to require cyber insurance. And then we'll look at the E&O in some detail, and I'll share very briefly our new and exciting product called InvestiGuard. The remainder of this presentation deck is a digital brochure of InterWeb, which you're welcome to review at your leisure. We'll also leave plenty of time at the end for Q&A. So feel free to jot down any of your questions and chat them to the Finlocity folks as we go along, so we can cover them before the end of our time together. So again, the basics of brokering and buying. So it sounds really obvious, but I strongly encourage you to read your policies. You know, you don't need to be an expert. You have a broker for that, but you can help your broker by taking a look at a few key areas of the policy that have the most impact. It's actually in your best interest to have reviewed the basics of the policy. The few key areas are, and we'll just go to the list above there, rates, limits, and deductibles, the definition of insured, the definition of professional services or the risk elements being covered, the exclusion section, certain endorsements, and the notice provisions. So a coverage choice should really be based on more than rates, limits, and deductible. You know, you want coverage. Now, this sounds simple enough, but if you're a broker-dealer or an RIA, one of the questions is, well, can you grow free during the year? Do you have to notify your insurer and pay them extra if you grow more than X percentage? So are your new hires automatically covered, or do they need to be listed by name? So that's one thing that will play into how attractive that rate really is. Sublimits. So what's a sublimit? Let's give you one example. So let's say that you have $1 million limit, but you have a sublimit of $500,000 for alternative investment or trade errors. That is what a sublimit is. It's a lower amount within the maximum level of coverage that you've purchased. Stepped retro dates. What we're referring to here is if you've increased your limit of liability over the years, or you've opted for a lower deductible, or you've added to the scope of your coverage. For example, maybe you've added coverage for the sale of alternatives. Many insurance companies will only provide coverage for those beneficial changes to you on a going forward basis, meaning a future claim arising from past activities in that arena would be subject to the less advantageous coverage terms you had when the acts were performed, not the current better coverage that you paid for. So look for those stepped retroactive dates. They can often be negotiated away. Deductible minimums and maximums. An example here would be, and this is very common actually, let's say there's a $75,000 minimum deductible for trade errors, but it has a $10,000 per person element. That could well exceed $75,000 if you had, for example, a trade error that affected multiple people. And we've seen this, particularly with rebalancing and things like that. It's actually affecting dozens and dozens of people. And if you have a $10,000 per person deductible with a minimum of 75, you're going to be well above that 75,000. So just be sure you understand how the deductibles work. Now the rest of the slide gets a little bit easier. So the definition of insured, very simple. Look at that, make sure that all your entities are included. Do you have any independent contractors? Are those included for coverage in the definition of insured? Not just your employees and your home office staff, but independent contractors. And then the better policies actually say something much more broad. It says that the definition of insured is any person for whom you are legally responsible. Also meaning that their acts, any person for whom you are legally responsible, you'd be protected for that. So then the definition of professional services or risk elements being covered. That really is the core of the coverage. It's important that you thoroughly understand the scope of your coverage in terms of what's defined as a covered professional service. A broad-based description is better than a tight list. For example, if your policy says you're covered as an investment advisor, that's terrific. But if it goes on to say you're covered as an investment advisor only for specific products, not as great. Or if it says you're covered as a life insurance agent, that's terrific. But if it goes on and has a long list of various insurance products, that leaves room for products that you might be selling that are not included. So that can be less beneficial to you. And then also make sure that if there is a list in particular, that it's current, that it's modernized. For example, there's no shortage of folks coming up with new products in the industry. So you want to make sure those are included, such as conservation easements or BDCs or exchange traded notes. It might only have coverage for exchange traded funds, but notes now are out there. So if you have a list, it's trickier just because you have to be sure that it's modernized with all of the new products. And on exclusions, the preamble, that's the part of the policy that starts above the beginning of all of the list of exclusions. And how broad it is can have a huge impact. For example, does it say you have an exclusion for only claims arising from, which is pretty narrow, or does it go on to say make these exclusions apply more broadly, which would say, for example, claims arising from or in any way involving, right? In any way involving is a much broader way to apply an exclusion to a particular claim you might have. So the more narrow that preamble is, the better for you. And as you read through the exclusions, which again was the goal, be sure to discuss intent with your broker or the underwriter if the broker can't clearly articulate what the intent might be. Again, that's where you have the opportunity to negotiate modifications to exclusions that either you don't understand, you think can be misapplied to your business model, or you just flat out don't really like it. You can always find usually a modification, such as, okay, this particular thing will be excluded, but maybe I could settle for a higher deductible and a sublimit to give me some coverage for this exposure. Endorsements. Now, these endorsements are going to either add, modify, or remove coverage. So again, if it's not real clear what section of the policy that endorsement is applying to, or you just really need to get a better angle on it, discuss the intent. And again, these are easy to negotiate modifications to them or just have them removed altogether. And lastly, the notice provisions. It's really important for you to know your obligations and avail yourself of coverage. It's really sad when I find insureds have carried insurance for years and years, but didn't realize that they had to report claims, for example, upon first knowledge of the problem. They think they can hire their attorney and try and resolve it, and then later on when they can't, report it, and that can create really just a terrible loss of coverage. So know the time frames that you need to know in order to report claims. It's usually the date of your knowledge. It usually has to be within the policy period, but you do have the opportunity to report potential claims, which is, very beneficial. And we'll get into a little detail on that in a little bit further down. The next element of the basics of brokering and buying, I call it trusting your broker. And I would say don't trust your broker, sort of. I'm kidding, sort of. To steal a line from good old Ronald Reagan, I say trust but verify. First and foremost, your broker should know your business. Your local broker is great for handling your general liability, your BOP, your workers' comp, homeowners, auto, and so forth. But when it comes to E&O or cyber for the financial industry, there really are truly just a few that know your industry. And they must also have the experience to know which insurers and which underwriters, in particular, the human beings that underwrite your account at those insurers also, that they know your business. I liken the process to say, like going to the hospital. Inside that building, there are many great qualified specialists, doctors, etc. But you have to know which door to open to find the specialist you need. So just because a broker says they're going to go to a well-known insurer, say like CNA, or Travelers, or Hartford, or AIG, or Chubb, it doesn't mean they've opened the right door and landed on the right underwriter who will understand your business and provide you with the right coverage in response to factual negotiations made on your behalf. So it's wise to ask your broker about their experience as well as the underwriter and the insurer that's bidding on your business. So again, like I said, they must know your business, but they must also anticipate your needs, and they'll be able to do that if they do know your business, because they'll be in a position to see what your peers are experiencing. They'll have a higher level view of what kind of claims are going on and what kind of products might be creating trouble down the road and what best practices that you might benefit from. So it's good for your brokers to anticipate your needs as well. And again, I can't say this enough, you're really trying to buy protection just versus a policy. If they're only selling you a rate of limit deductible, then you really need to move on to another broker. So you must know what you're buying, because as much as you want to trust your broker, it's helpful if you can be involved in that process. Smart competitive bidding. So there's something called blocking in our industry. You have bidding versus blocking. If your broker's telling you that they're going to go to 20 markets on your behalf, they're likely just blocking. What that means is the insurance companies they're not going to bid against themselves with multiple brokers. So a broker can only represent a client I should say it the other way. A broker can only one broker can represent the client to the insurance company. So a lot of times brokers will say, oh, I'm going to represent you to these 20, when they really don't seek valid quotes from all of those markets. They're just trying to block another broker from going to those markets. So just understand if you're really getting quality quotes out of all the markets that this broker has indicated they're going to approach. And again, strong positioning is the key. Going to all these markets is a lot of work. It's a lot of work for the broker and it's a lot of work for the client. But you do want to have a broker that can position you well with each of the markets that you're going to. First of all, you want to be sure that they're not beholden to any any of their particular carriers. In other words, if they're going to send you to 5, but they place 90% of their business with one market, are they really going to get you proper quotes from those other markets? You don't want them to be beholden to any one particular insurer. So you also need to see that they have access to the broader marketplace. So they can represent you to all the markets. That it makes sense to. You don't do it every year, but when it's time, it's time. And you want to have broad access to the market. And you also want to have intelligent negotiations. And what I'm referring to here is, if they understand your business, they're going to be able to draw out of you information that isn't evident in the paper, the application and all the attachments. They're going to be able to pull out of you I call it the beauty contest, the quality elements of you, your firm, your operation, your compliance, your systems, whatever it is that makes you better than the average peer of yours, and present those facts to the underwriter to position you to get a great quote. And that's particularly important if you've had some trouble in the past, if you've had a few claims and you need to describe what you're going to do differently in the future. So it's very important to have intelligent negotiations with these carriers that are based on facts. And then technical excellence, I'm referring here to your broker has to have the ability to modify the coverage and modify the policy. Most often, the most experienced brokers will actually write the endorsements, make sure that all the dots connect between the endorsements and the base policy. That is very important, particularly to avoid claims in the future that don't get covered. So, technical excellence by your broker in actually the contractual part of the job and working with policies is extremely important. And hopefully after the sale, they'll be able to provide some ongoing education for you, your field force, perhaps in the form of white papers, videos. Maybe they'll come to your top agent gatherings, or your top rep gatherings, or your annual compliance meeting to get face-to-face with the additional insureds that they really are the broker for, and just support you at those gatherings with, particularly support you with your compliance messaging to the field force. And claim advocacy, I believe, starts with the sale, starts with having a good policy. The better the policy, the more well-written it is, the fewer potential gaps there are to give an insurance company the opportunity to try to deny a claim. So hopefully claim advocacy isn't something that ever you have to get out of your broker, but it's important that they understand that's part of their role and that they will do that for you. And that advocacy has to be supported by what I call it's a time-proven process, where you're reviewing the coverage or claim tender to the insurance company. They're reviewing the reservation of rights letter that you get back from the insurance company saying whether you're going to have coverage or not, or partial or what have you. Make sure that those decisions by the carrier are based on what everyone's understanding is of the policy itself. Sometimes there's just simple communication problems when it comes to the claim process. And, as an advocate, our role is to be the communication director, I call it. So you're just getting the parties to talk promptly and just get to the right messaging. And then sometimes there really truly are coverage problems. And the coverage problems, when it really gets serious, we brokers will rely upon, our industry contacts and support from various experts to bring those to the table to help our clients get the claim going in the right direction. And lastly, the goal really is to have a long-term relationship with your broker. It should be built on trust. They need to know you're not hiding anything from them. You have to know that they are going to do their level best to get you the best terms based on your needs and your expectations, that they're giving you the extra mile service, because there's lots of folks that are included as insured in the policies. If you're a broker-dealer, it's you and all your reps. If you're an RIA, it's you and all your IARs. Same with an agency. You've got a lot of agents in your organization, and they're all the insured. So you need to know that they're going to give you the extra mile service. They also really operate as your coach and advocate, coaching you on best practices, coaching you on how to put together a proper application so they can get you the best deal, and advocating for you, as I said earlier, with the claims process, because they should be in the trenches with you. This again is a long-term relationship, and it's great to have them in the trenches with you. Okay, so now we're going to go on to fine-tuning some fiber. So fiber today is what E&O was in the 1990s. Everybody needs it, but if you haven't been bitten, you're not sure you want to buy it. But I would say, if you hear nothing else, hear this: don't wait. The time is now to buy it. Just a few years ago, the policies were primarily designed for tech companies or retail establishments taking credit cards, but things have changed. Healthcare, retail, real estate, tech companies, they all have now more tailored policies. And we're proud to say that we've been actually instrumental in getting the insurers to modify policies to meet the needs of the financial services industry. Up until just recently, it was sorely lacking in understanding the common claims that you're going to see. So let's jump in. I say buy it now because prices are rising, and they're rising due to claims. No one is immune from the vulnerabilities of our systems or from making a mistake. Recently, one of our clients, CFOs, did that thing. They clicked on the Microsoft 365 bogus email. So no matter how much you train and train again, we are all capable of making that simple type of mistake. So in addition to claims rising prices rising due to claims, many of the states and the self-regulatory organizations are starting these mandates, and these sweeps are going on. So, the regulators will be looking to see what kind of structures you have in place and how prepared you are. And like I said, some of the states, SROs, and even business partners are starting to mandate that you carry coverage. So cyber is every bit as complex as E&O is. It sounds simple, but it's really not. It's got a lot of buckets of coverage, but they fall into about 6 to 7 different buckets. 1 is harm to your systems or data. 2 is liability to others for damage or if there's a breach. 3 is the fines and the penalties that you might incur. The 4th bucket is cyber crime, which comes in a few different forms. Another element is the event support services, very critical, and I'll go into why this is a really great benefit for you. Then there's multimedia and intellectual property, and there's technology services and miscellaneous E&O can be added usually. So let me go down this a little bit further for you. So network interruption and recovery, we'll go back up. That includes, for example, loss of income. So you're going to be looking for protection in the event, this is, when you look at your policy, look for the fact that it's there. It provides protection in the event that an outside network on which your business is dependent causes you to experience an interruption. That's a great benefit, the dependent networks coverage. Under fines and penalties, know this, that each state has their own rules about what you must do if and when there is a cyber event, And actually, you can be subject to fines for failure to meet those requirements. In addition, you can be fined for not having certain protocols in place in advance of a cyber event. Cybercrime, this is the huge piece. This is the piece that's most relevant to, the financial services industry. This is the most likely problem that you're going to experience. That is where you have often it's a phishing scheme, and someone clicks on the email, they scrape off, the perpetrators will infiltrate the email system, they'll scrape off attachments to those emails, which contain what? Names, addresses, account numbers, signatures, banking information. It's crazy. Then they perpetrate a crime by impersonating the client, asking someone to move funds that belong to the client to a bogus bank account, and there your theft has occurred. And it could be accomplished in numerous ways. You have to do voice verification, so you have the telecommunications piece involved. It's done through your computer, so you've got the cyber piece of it there. Social engineering is the impersonation. It's fraudulently changing someone's behavior. That's why they call it social engineering. Those types of claims are the most common that we see. In addition to network extortion and ransom, you've heard about that. They'll lock up your system and expect you to pay them something in terms of Bitcoin. And what makes this particular piece of coverage so important is that most of the policies don't cover the loss of third-party funds. So this third-party fund coverage is what you have to really look for. And it's up there, and we'll talk about it in a second too, under best must-haves. But the cyber crime could be targeting you, the home office, your employees, etc., or it can be targeting your client. So there's two sides to that coin. Event support services is extremely important. This is where you would avail yourself of a breach coach and a bench of vendors. Now, these are folks that are going to help you through the process of having an event, determining what happened and so forth, and it's also going to give you a bench of vendors that can help you prepare for an event or try to deter having one. Multimedia and intellectual property. Many of you have other people's information on your website, and this would give you some protection in case that information was misused in violation of whatever privacy or contractual requirements that you have if it's other people's information. Technology services and miscellaneous E&O, all that is getting at is if you have created some technology, you provide some technology service, or you would like to tack on, coverage, say for being an RIA, you can do that. You just have to ask for it and pay extra for it. So going on to the must-have features, another thing that makes cyber customized for your industry, and it has only recently been done, is that it now includes coverage for independent contractors. That is your business model, whether you're a broker-dealer or you're an RIA, and often as an insurance agency, that's your business model. You have independent contractors who are in your sphere of influence using your systems, and you want it to be sure to include them not only as insureds, but to be sure that if they make an act that creates a cyber event, that you have the protection as well. And like I mentioned before, the loss of third-party funds, you want to make sure that you're going to have coverage for the loss of third-party funds. Third-party meaning your clients or some other party, not just you, the home office, etc. This third-party funds coverage is the most important thing. And dependent network included. Again, that's a nice little twist. It says that if your business has suffered because of a network upon which your business is dependent, causes you to lose income, you can get coverage for the loss of income because of an outside problem. And also then notification costs. Notification costs are where personal private information has been breached, and you have an obligation now to notify each person who was affected. Now, right now, the average cost we're seeing is about $147, $150 per person. So if you've had a breach, you can see how that cost can start chipping away pretty quickly at the limit of liability that you've purchased. So it is better if those notification costs are outside or, say, on top of the limit of liability that you've purchased, so that those costs don't erode the rest of the coverage that you have available to yourself. So you might want to jot that down. That's a good one for you to keep in mind. Scope of coverage, these are some basic questions that you should ask your broker. Whose systems are covered? Mine, outside, dependent, my advisors, whose systems are included for coverage, and who could have caused the error, who made the mistake. And then you have to say, well, who's been damaged, what's been damaged, and is there any support that we can get for this event from other policies. Often, we're going to engage the E&O policy because maybe there was a breakdown, their voice verification wasn't done, and there was a transfer. Or is it going to be, again, in the case of theft, is it going to be a fidelity bond program or a policy that can provide some support and help pay for this claim if there's a question about coverage under your cyber policy? Sometimes D&O insurance can help with some of this. So your broker should know when you do have a problem, which other policies should be put on notice as well. Now, if you have a cyber event, there's a few must-dos. Now, this is another thing you should be jotting down if you don't remember anything else here. First thing and foremost, you call your broker to make sure you've got the right phone number of the person you need to call on your cyber policy, and that person will lead you to your breach coach. The breach coach is paramount. The breach coach is going to pretty much direct the traffic for the whole claim, the whole process. They're going to be using that bench of vendors. The important thing about talking to your breach coach first is that those communications are privileged and confidential because most breach coaches are attorneys. So while you all are running around trying to figure out what happened, who did what, you really don't want those kinds of communications unprotected, because you might be wrong what you think happened at the very beginning, and you don't want to have a record of incriminating someone or your entity or yourself. You want to just be sure to have all those communications privileged and confidential, particularly at the outset, so that you can proceed with some confidence that you've just had this privileged and confidential communications, and you're not going to regret it later. The goal at that point is to really stop the bleeding, and that's what your breach coach is going to help you do. They're going to find the forensic experts that will help quickly determine what happened, what's the scope of the damage, who's been harmed, what do we need to do immediately to stop the bleeding and protect the system and take the next steps. Now, if you feel like you might not be ready for coverage yet, or not ready, cyber-wise, I would encourage you just to apply for coverage. And this sounds funny, but the application itself will give you a clue as to whether, you're ready, cyber ready, I should say, because you're going to have to answer questions about encryption and systems and firewalls and so forth. And you're going to, hopefully the app's not too complicated. Most of them are, but some of them are very simple. But at least, you might have to engage your IT guy to, help you answer some of those questions, but you at least know where you stand. And at that point, you can then engage consultants to help you get cyber ready. And, one of the things that everyone needs to start preparing for are potential sweeps. They are going on, and I think you kind of want to apply for coverage and engage that consultant before the sweep, comes through your office. So it's good to get on this sooner than later. And then once you have secured coverage, have a plan and communicate the plan internally. If there's an event, does everybody know what to do? Do they know who to call? So I would say have the plan and then communicate the plan. And it's always something that'll be updated as you guys go along. So we're going to shift some gears here and now go on to E&O insurance. So E&O evolved. Unlike cyber, which is relatively new, E&O has evolved mostly in a negative way, in my opinion. Insurance is what I call Me Too business, meaning underwriters and insurers have, over the years, copied each other's policies and their exclusions, and it's been piling on year after year, making it quite a chore for you and your broker to decipher coverage and create endorsements that do not have unintentional gaps in coverage. You have to just connect so many dots. And often you don't realize you have a gap in coverage until there's it's evident that there's an uncovered claim. So it's very frustrating for both us, the brokers, and you, the insured. So after 30 years in this business, we determined enough was enough, and we successfully set out to offer the financial services industry a new, modernized policy. And while we're not here to make this a commercial, I really think it's just helpful for you to know the genesis of the need for this modernization, the problems that existed, and the solutions that you too can negotiate with your insurer through your broker. So we're going to get in the weeds a little bit. Bear with me. I'll get back high level as quickly as I can. So now we'll move on to what I call the 3 keys in focus. So when we created InvestiGuard for the broker-dealers, investment advisors, and insurance agencies, we actually found that the improvements in the wording and the solutions fell into 3 general categories that, surprise, surprise, were the most important as expressed to us by our clients. And so those 3 categories were: they wanted more control over the claim process, they wanted broad coverage, and they wanted the right tools for growth and succession planning. So like we said earlier, the sand in the shoe, it's the small words that can really hurt you the most. And often it's what's not in the policy that can help or hurt you. And again, your broker should know you well. They should anticipate your needs. They should seek to provide you with protection. But it helps greatly if you know what you're buying. So we're going to walk through some of these key areas of the policy and, help you take home a few nuggets. So 1, you want control over the claim process. And more importantly, the results. So we found that most insurers are pretty eager to jump in and defend themselves in the event of a claim. However, because it's the insurer's nickel, you must follow certain provisions of the policy in order to not jeopardize their ability to mitigate the ultimate cost of a claim. It's their money. So here are some areas of compromise that actually benefit you. 1 is if you're able to negotiate preferred defense counsel. You want to find the right defense counsel. Now, so provided that the attorneys that you would prefer are qualified and are willing to accept what the insurers are willing to pay, for their services, you can use your preferred firms. The key here is, and why this is beneficial, is that these folks then represent you. When the insurance company assigns their own defense counsel, they're actually working on behalf of the insurer. They're not technically representing you. So having these preferred counsel, your preferred counsel representing you, it's an entirely different situation, and it's extremely important, actually. The second area is where you can dispose of claims within the deductible. It's really simple. If you can dispose of the claim, get the proper releases, you do not need the insurer's permission to do that. You do need to report the claims, though, in a timely manner, but you can move ahead and resolve the small claims. Also, a better policy will allow you to incur some amount of defense, usually up to about 50% of the deductible, without getting the insurer's consent. So that is where you're stopping short of completely disposing the claim within the deductible. And basically, if you've done your best, you've spent 50% of your deductible in defense, it's not looking like you can actually resolve it completely, then it's time to get the insurer involved. And since it's going to be on their nickel shortly, that's the right thing to do. So I'm going to get in the weeds a little bit more here. We were able to omit what we call the hammer clause. The hammer clause is a nickname for a standard provision in a policy that says if you refuse to settle for an amount that's recommended by the insurer, from that point forward, it's on your nickel. That's why they call it the hammer. And then any amount above the defense and settlement amount up to that point is your responsibility. So that clause has been removed from InvestiGuard. I want to move on to something that's really important, the notice of potential claims. So most policies will allow you to what I call park your coverage for potential claims by putting them on notice, putting the insurer on notice. But in order to avoid what they call the laundry list, they require that you give them full particulars, quote unquote, full particulars, which would include in most policies that you provide name, addresses of potential claimants, dates of the wrongful act, detail of what the wrongful act is that's likely to give rise to the claim, and so on and so on. I mean, that's how they define what is a, quote, claim that you can report as a potential claim. If you don't have all that information, they don't have to recognize it. So here's an example where this has some meat. You have recommended and or placed dozens of clients in a particular investment that's gone belly up. You may not have all of those bits of information that's required at the time of the first knowledge of the fact that you have potential for some claims. Plus, what are you going to say the specific, quote, wrongful act committed by you or your advisor is? How exactly are you going to tell on yourself? It's quite a quandary. In addition, if you wait to report these claims later, when more details are known, you could be denied coverage for not providing notice upon first knowledge. So it's very frustrating. InvestiGuard solved this problem by, again, small words, right? We solved this problem by indicating you can report potential claims with, quote, known particulars at the time. The time you report it, just tell them what you know. Again, more control over your claim process. Lastly, we removed 3 standard clauses that do not favor the insured. These clauses dictated that the insureds could not bring a claim against the insurer until a claim is essentially resolved. It forced the insureds into alternative dispute resolution, like mediation, arbitration, and also dictated the venue, either civil court, mediation, arbitration, per the insurer's preference. It's our belief that insureds should not be limited in this way and should be free to pursue the resolution of any coverage dispute that they deem beneficial. I mean, again, these clauses just serve to the benefit of the insurer, not for the insured. So, and frankly, I don't think most underwriters even remember that these provisions are in the policy. So if you can get them out, get them out. Okay, moving on to key number 2, broad coverage. Who doesn't want broad coverage, right? And that's what we're all in this together for. So selling away. This is the extremely valuable coverage. It's hard to get without sublimits and higher deductibles. And we actually make this available to both broker-dealers and RIAs, because RIAs have the same exposure of, someone in their downline, if you will, going off the reservation. And certain loopholes have been removed within the coverage of InvestiGuard that could, in other policies, try to take away the selling away coverage. And we also offer it with full limits of liability. So for the right client, it's a terrific, valuable coverage. And then approved outside business activities. Some of the clauses that give coverage for outside business activities would exclude coverage if it wasn't a specific product type, or if it's a specific product that is not listed, or approved by the broker-dealer, for example. Broker-dealers don't want to approve every single specific product, but it is reasonable for them to approve specific product types, which is a lot more lenient, more broad, and less of an administrative issue if you're trying to give coverage for outside business activities. And then negligent act versus any act. Let me give you an example there. Again, small words. If a policy only covers a negligent act, it's inherently not going to cover intentional acts, such as fraud. So what if you're the innocent insured who didn't commit the intentional act of fraud, and your policy only covers negligent acts? This happens. So obviously, the preferred language here is negligent acts versus any act. Insolvency. So this is a real issue in the financial services field. Many policies will immediately exclude claims arising from products that have tightened their belt or ceased distributions. This is particularly problematic when it comes to REITs and other alternative investments. So you're looking for language that will only exclude for true insolvency or receivership of the investment, not just a reduction or cessation of paying dividends or distributions. So the next question is about knowledge. When was knowledge of the troubled product? So we're almost done with all this weedy stuff, folks. Bear with me. So here's an example. What if the investment ceased distributions last year? That's normal. You did not report any potential claims. And this year it actually went insolvent. When did you have knowledge? When do you report a claim or a potential claim? In the better policy, the insolvency exclusion will only apply to products insolvent as of the first policy you have with this insurer. In other words, the coverage gap trap has been minimized as respects the common evolution of an investment performance or lack thereof. You don't want to find that you don't have coverage for something that becomes insolvent during the policy period you just bought. You want to have that protection. That's why you're buying the protection. You can't buy coverage for the burning house that you already knew, but you should have coverage for the new problems. And lastly, certain certain coverage elements commonly have specific product restrictions. For example, often coverage for discretion might be limited to the use of mutual funds and annuities, and better policies don't have those restrictions. So now some positive stuff. So growth and succession planning. E&O has some really terrific benefits that are often overlooked. So this is something you can jot down. One, you should note that your heirs and executors are included as insured. This happens. This is a great benefit in the event of death or disability of an insured, particularly the owners and controllers of a company. If terrible things are happening during the time that they may be out, ill or disabled, and something falls through the cracks, and later on a claim arises from that, then the heirs and executors of their estate has protection for a period of time. So that's something you could note. Another name for a discovery period, because now we're talking about automatic discovery periods, is a tail. So this is a period of time at the end of a policy period for you to report claims for acts prior to the end of the policy. So if the named insured cancels a policy, or if an individual insured retires or moves, this is available. And it's very beneficial to have this option baked into the policy, as it guarantees it's available if needed, and preferably at a predetermined pricing and a duration of time, such as 100% of last premium for 1 year or 200% of last premium for 3 years. Otherwise, the insurer has the option of not offering a tail at all. So most importantly, if the firm is sold or merged, this is where we get to the transaction opportunity with it's a clear coverage grant. This is really important because if the firm is sold or merged, a tail is often required, and usually it's a long tail. And again, having the option solidified as a clear coverage grant is important. I call it sleep insurance, and it's best negotiated in advance of having your policy bound. So this is a wrap. We're going to move on. So thanks for hanging in there with the detail. Cyber and especially E&O is tough stuff, and it only gets interesting if you need to use it, right? I felt the whole universe say right. So
absolutely. Well, thank you, Sherry.
So hold on one second. Hold on.
Okay.
So just so you're aware, you can check out InvestiGuard in more detail via this brief highlights page, or you can go to the next page of this deck and you'll be able to listen to a video, or you can take a deeper dive into more detail that I didn't go over with this PDF link as well. So with that, you can also check out our InterWeb team overview. This is where you can pick up more information about InterWeb and the team, some testimonials, our philosophies, and how we think help our clients. So I just wanted to thank you so much for tuning in. We very much appreciate you, and we'll now open it up to questions. Thank you, Ryan.
Thanks, Sherry. Appreciate it. Yeah, we'll go ahead and take some questions. Members, please be sure to type your questions into the question box on your control panel. And I know that we already have a question from Jason that I wanted to ask, that we wanted to ask you, or that he wanted to ask you. His question is, I'm a small RIA wealth management firm that has its E&O 1 million, 2 million with advisors gold through QBE Insurance Corp, utilizing an insurance agency that also serves in some underwriting capacity, either exclusive or partial. It also includes cyber coverage, 500K to $1 million. We review the policy yearly, ask questions, provide a cover letter and details where applicable. Since this firm is the designer of the policy, is this a problem as they are not independent? And aside from working on the renewal, I never hear from them throughout the year.
I do some business with those folks myself. I would say they're actually they put together a pretty good policy. It serves most of their clients pretty well. We have been able to improve upon some of their coverage, either by rate or, coverage itself. But, it's not uncommon not to hear from the broker unless, you need to reach out to them. But I'm sure if you did reach out, they would, give you the time of day. So I would encourage you to do that. But, obviously, we would be happy to give you an audit of your policy and see if we can improve upon something. And if we can, we let you know. And if we can't, we'll let you know that as well.
Excellent. Excellent. There's a quick follow-up there to that question. It says, which carrier is InvestiGuard provided through?
Good question. InvestiGuard is actually backed by Partner Reinsurance. They're an Irish company. They're rated A15. They're very strong. We actually access it through London, but it is not a London syndicate. It is an insurance company standing on their own 2 feet. They've been around for quite a while. Our guy who has the underwriting authority for Partner Re is very experienced. We're very pleased. We don't think he's going to be an in and out market. He's looking at this like a 10-year cycle. He understands, unlike some of the other carriers out there, that this industry has a 10-year cycle. We get boom and bust. We have our, about every 10 years we have a new thing, whether it's a tech bubble burst or 2008 or some new product that creates havoc for everyone. But it's just it's just a cyclical business, and he understands that. So we're very pleased with our relationship with them, and we're doing some great things. We've found some terrific policies for our clients in the last few months.
Excellent, excellent. And then just, I guess, additional follow-up, and I could have done a better job with this question. If you maintain a life and health insurance agency through a separate entity with E&O coverage from a different firm, can the InvestiGuard policy also be used for our independent insurance agency?
Yes, it was built to accommodate not only a broker-dealer firm, its RIA firm, because a lot of folks are hybrids, right? They'll have a BD, an RIA, and an agency. And we've also built it to accommodate individuals. So let's say you had to peel out of one of your, like say your broker-dealer policy and you needed to get coverage as an individual, it can accommodate a rep, an advisor, or an agent. But yes, one policy can accommodate all of that activity. We also have a D&O rider. It's not a rider, really, it's a policy, but it's a coverage part that attaches to the policy. Again, we have just tremendous flexibility with this underwriter. He has a ton of experience, and he even allows us to utilize the best parts of other people's policies if we want to and need to. So we're very happy with that. So yes, we can help you with that.
Excellent. Excellent. Well, looks like we covered all of our questions in the time frame that we have. Sherry, is there anything else that you'd like to cover before we wrap up today?
I don't think so. I just want to thank everyone for tuning in. I hope you weren't bored to tears, but like I said, it's the small things that matter, and you usually don't figure it out until you have a claim that's not being covered. So you do need to get in the weeds a little bit, and hope I gave you some nuggets that you can take back and utilize. And if you ever have any questions, you can feel free to give us a call.
Excellent.
Thank
you, Sherry. Thank you, everyone. We appreciate you being here. Thanks, Sherry. Please be sure to check out this and other great videos on Finlocity Video Vault. Until next time, have a great day, and thank you for supporting Finlocity, where the conversations live on. Have a great day, everyone.